although the world is turning digital, it still relies on analog in so many ways. And a great example of this is the technology industry. We all use mobile or smartphones, a digital technology if ever there was one. But to convert the electrical signals to sounds we can understand, these devices must contain analog silicon chips. Their role as a transducer, to use the technical term, a device that converts one form of energy to another, means they're still very important, especially as they're also used to regulate power voltage supply to other chips in a system, such as microprocessors. Now, okay, I know this all sounds a bit spoddy. From an investment perspective, it's telling stuff too, and something we all need to bear in mind. After all, pretty much everything, from our smartphone to our car, TV, laptop, has got silicon chips of some kind embedded within it. The fact that silicon chips are really pretty much everywhere means they can also be important for investors and not just techies and spods. In fact, we really do need to keep watching the SOX, or to be more precise, the Philadelphia Semiconductor Index, because it can be a useful indicator for broader market sentiment. Hello, I'm Russ Mould, AJ Bell's Investment Director, and I'm here this week to explain why the $300 billion a year silicon chip industry might have its uses for your portfolio, whether you actually own any tech stocks or not. Now you can find the SOX, S-O-X-X, for free on many reputable internet sources. And as you can see, it's done pretty well in the last 3 or 4 years, ever since the US market bottomed in 2009. Now the SOX is formed of 30 leading silicon chip and chip making equipment specialists. It's a US index and most of them are American, but there are also some Asian stocks in there and also the UK's ARM, a FTSE 100 firm, don't forget. Now, as we've already seen, the SOX is trading near a 15-year high. There's also quite a good apparent correlation between the SOX and America's broad benchmark S&P 500, which is, let's face it, a huge influence on equity markets everywhere, including here in the UK. Now, okay, we all know the past is no guarantee for the future, but history shows when the S&P 500 is doing well, the FTSE All-Share tends to tag along for the ride, and if the US benchmark does badly, the British index tends to follow, so the SOX may even have a read-through on a broader basis. Now, last year was a good one for the silicon chip makers. 2014 saw global worldwide sales rise by 9.9%, actually to $336 billion, according to trade body the World Semiconductor Trade Statistics firm, or WSTS to its friends. That was the best year's growth since 2011. Now, according to another consultant, IC Insights, the computing and telecom segments each generate roughly 1/3 of global integrated circuit demand. Consumer electronics chips in 12%, cars another 8%, and industrial, medical and other applications the rest. So this year looks like it's all going to be about the Apple iWatch. No, I haven't got one. And also the launch of Windows 10, the operating system, but we do need to be careful. Previous Microsoft system upgrades have taken time to get traction, and consultant IDC actually thinks global PC unit shipments will drop 6% this year because there was such a big upgrade cycle last year. The same firm expects just 11% growth in smartphone volumes, down from 28% last year when we had the Apple iPhone 6 launch. Now, all of this may help why Microsoft and microprocessing chip giant Intel both coughed up poor results in the spring. The software giants bounced back, but as you can see from the chart here, Intel certainly hasn't. We can also see the price of DRAM memory chips is plunging. That's not always a great sign, at least for PC demand, and note how the shares of US firm Micron, a big DRAM maker, are showing more than a little strain. So in some ways, chips can actually be quite a handy read-through to what's happening at big PC or phone or car makers, but therefore the broader economy. If chip sales are strong, volume sales of the finished gadget device also should be strong. The opposite can apply as well, of course. We're about to go into the US quarterly reporting season, so the headline numbers and particularly guidance for the second half of this calendar year from the big chip makers and their clients could be particularly telling for setting the broader market tone. DRAM maker Micron's due to report any time around the 23rd of June. Intel's numbers are due around the 14th of July. Microsoft's figures are slated for July the 21st. and Apple's latest numbers are due around July the 27th, some of those dates yet to be confirmed. For the record, ARM published its own numbers on July 22, so let's keep watch and see whether the SOX can help pull markets higher or not. Thank you for your time, and I look forward to seeing you on a future occasion.